Hello and welcome, dear subscribers. Thank you for joining us on this journey. So, picture this. It's a regular day in global politics, which means it's anything but regular. Tensions between the United States and South Africa have been simmering for a while. It's like that awkward family dinner where two cousins keep giving each other the side eye, and everyone's just waiting for someone to knock over the gravy boat. The United States has been looking at South Africa's close ties with Russia, China. South Africa, on the other hand, has been flexing its muscles on the world stage. It's a classic power dynamic, a push and pull that's been playing out for years. Then, former South African President Jacob Zuma steps up to the microphone. Now Zuma is a character who knows how to make headlines. He starts talking about the global financial system. He criticizes the dominance of the US dollar, calling it a tool of control. He suggests that the world needs to break free from this system. Alright, let's break this down. You hear the word SWIFT and you might think of Taylor Swift or a fast-moving bird, but in the world of money, it's something way more important. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. Think of it like the WhatsApp for banks. It doesn't actually move money. Instead, it sends secure messages between banks. So, when a bank in Johannesburg needs to send money to New York, SWIFT sends the message. This messaging system is the backbone of international finance. It connects over 11,000 banks in more than 200 countries. It's the plumbing of the global economy. Without it, international trade would grind to a halt. Imagine sending a guy on a horse with a bag of cash. Chaos. Although SWIFT is based in Belgium and claims neutrality, its operations are heavily influenced by the United States and its allies, because so many transactions are in dollars. This gives Washington enormous leverage. The US can pressure SWIFT to cut off a country's access. If you're kicked out of SWIFT, it's like being ghosted by the global financial system. Your ability to import and export is crippled. An economic death sentence. It's controversial because a neutral utility is serving foreign policy ends. What should be neutral has become a powerful tool of foreign policy. So, after Jacob Zuma's fiery speech about the dollar, the gears in Washington started turning. They didn't just send a strongly worded letter or a vague statement. They went for the jugular. Reports surfaced that U.S. officials were warning South Africa about its behavior. If you continue to cozy up to our adversaries and challenge the system, you might find your country disconnected from SWIFT. This wasn't a quiet threat whispered in a back room. Official justification. Concerns about money laundering and terror financing. South Africa was put on a gray list. The timing looked suspicious. Strengthening ties with Russia. BRICS calls. It felt political, not technical. Like getting a speeding ticket after arguing with the cop. Being cut off from SWIFT would be catastrophic. South Africa relies on imports, medical equipment, wine, minerals. Companies couldn't pay for imports or receive export payments. South Africa was rattled, a delicate balancing act between sovereignty and economic survival. Diplomats scrambled behind the scenes to de-escalate, a high-stakes game of chicken, livelihoods on the line. This tactic of using the financial system as a weapon is not new. The United States has a history of using economic might to achieve political goals, and SWIFT has been a favorite tool in its arsenal. It's like a superhero who discovers a new power and starts using it all the time. One prominent example is Iran. For years, the U.S. used the SWIFT threat to pressure Tehran. 2012, 2018, Iranian banks were largely disconnected. The impact was immediate and devastating. Ordinary people suffered. Shortages of medicine and food. Another case is North Korea, one of the most isolated countries in the world. Its access to the international financial system is severely restricted. Russia also got a taste of this after the 2022 invasion of Ukraine. Major Russian banks were disconnected, a massive blow to the economy. It hit ordinary transactions and pushed Russia to build alternatives. Russia began developing its own system. It sent a message: certain actions trigger the financial nuclear option, but each use also exposed a vulnerability and encouraged alternatives. China, Russia, allies, all started building shields. Action causes reaction. The constant threat of financial exclusion has sparked a global movement. It's a quiet revolution in the boring world of finance ministries and central banks. Countries are actively looking for ways to de-dollarize, to break up with the US dollar. It's not hatred for the dollar. It's resentment of the power it gives the United States. The BRICS nations, Brazil, Russia, India, China, South Africa, have pushed this for years. They're increasingly settling trades among themselves using yuan, rupee, rand, and more. China created CIPs, a SWIFT alternative that's growing fast. Each transaction that avoids SWIFT is one less the US can monitor or block. Ideas include new reserve currencies, payment systems, fintech rails. BRICS has discussed a shared currency. Complex, but it's being seriously discussed. Central banks are diversifying, more gold, more euros, more yuan. This chips away at the dollar's dominance over time. It's about building options, a financial escape hatch. But these moves affect businesses and require new legal and banking frameworks. Central banks are changing behavior. The dollar is still king, but challengers are building kingdoms. The US threat added fuel to this fire. This won't happen overnight, but the shift has begun. Slow, steady, consequential. When we talk about SWIFT threats and de-dollarization, it all sounds very abstract, but these high-level games have very real consequences for everyday people. If South Africa were cut off from SWIFT, it wouldn't just be a headline. It would be a disaster felt in every household. Prices for imported goods would skyrocket. That phone you wanted to buy, that medication your grandmother needs, fuel prices would spike, imports could be blocked or become prohibitively expensive. This would lead to massive inflation. The rand would likely plummet. Job losses, closed factories, shuttered shops, widespread pain. Shortages of essentials would hit the poorest hardest. Switching to other currencies can create new risks and complications for businesses. It could offer long-term security, but be painful in the short term. In Iran, SWIFT cutoffs made it difficult to import life-saving medicines, even humanitarian goods. So the US threat is a threat to 60 million ordinary South Africans. The situation with South Africa sent a shockwave across Africa. Other nations saw themselves in South Africa's shoes. This accelerated a push for African economic independence. For decades the talk existed. Now the need is urgent. One exciting development is PAPS, the Pan-African Payment and Settlement System. It lets African countries trade in local currencies without dollar intermediaries. It could save African businesses billions in transaction costs. More importantly, it insulates trade from external political pressures. Momentum for PAPS gained after the threat against South Africa. It's building the infrastructure for a more self-sufficient continent. Combined with AfCFTA, the goal is a single African market. That could boost trade, development, and Africa's voice globally. It's about building their own house with their own rules. A practical step toward economic sovereignty. The threat pushed leaders to act fast. The US-South Africa standoff is not happening in a vacuum. It's a symptom of a larger global shift to multipolarity. We're moving from a unipolar moment to multiple centers of power. The swift confrontation shows the growing pains of that shift. Rising powers and regional blocs are pushing back, demanding a more equitable system. This accelerates a splintering. A splinter net of finance may follow. We could end up with dollar-based, yuan-based, or regional blocs. For global businesses, multiple competing systems would mean nightmare complexity. Traditional East versus West is giving way to a complex web of relationships. Countries form partnerships around shared economic interests. Programmers in Beijing, Moscow, Pretoria, Brasilia are all trying to write the new code. The SWIFT threat was one move in a grand chess game that threatens fragmentation and higher costs for trade and supply chains. The world watches to see who blinks first. This is the start of a new uncertain era in global power. So, where does all of this leave us? As of today, the dust hasn't fully settled. In the short term, the United States still holds the most powerful cards. The dollar remains the world's dominant currency. SWIFT is still essential plumbing for global trade. South Africa was forced to walk a tightrope between asserting independence and avoiding economic collapse. Immediate fallout was contained, but political damage was done. The idea of a neutral, globalized financial system took a hit. Alternatives like CIPS and PAPS are still immature but politically backed. Parallel systems will be built slowly but steadily. A fragmented system could benefit major powers like China, or empower regional blocs like Africa. Ordinary people and global businesses could lose in the transition. The ultimate outcome depends on what happens next. Will the US seek a more collaborative approach? The South African saga was only the opening chapter of a new era.